Hi, everyone. Thank you for joining. Today is January 26th. I'm very, very excited to have all of you to join us at our 2021 Technology Investment and Prediction. So 2020 was a banner year for venture capital and for technologies. But obviously, Main Street doesn't really reflect on Wall Street, and there's a lot of really exciting things that's happening, into the venture capital world and to technology. But there's a lot of really interesting turmoil going on in the world. So in the next 60 minutes, Alfred and I are going to share with you some of what are some of the world events, Biden administration, COVID, the vaccine, how's that going to impact us from an investor point of view and as a technologist point of view, and what should we do about it? And then we're going to go into some of the technology trend, sort of bearish or bullish, and go deeper into some of the particular enterprise trends that we pay a lot of attention to. And then we're going to go into what stage, early stage, growth stage, and all the exit and SPAC. There is all these hot topics today. And what do we, an investor, what should we think about, and how are we going to go about doing this? So have that said, I am going to start with, how about the Biden administration? So Alfred, what do you think? So really, really exciting. I think America finally have a new president, but what does it mean to investor?
Well, good morning, Edith, and good morning and everybody, and also good evening to all of our friends from overseas. Happy New Year to all of you. Well, it's an exciting time. Our new president is finally on board. Obviously he has his hand full. He has COVID. Obviously, he's still trying to curb. Vaccine distribution is top of his agenda, right? He has said that he wants to have 100 million people vaccinated in 100 days, which is a very lofty goal. Be very good for not just the Americas, but also for the world if actually that can happen. It will unlock the whole supply chain. He still have some monstrous size stimulus package that he's trying to get out, $1.9 trillion. And local and also foreign terrorism has become really our top agenda at this point. Cyber attack is for real, and we all now are at home and highly dependent on cyber technology. Our trade war with China is not done, it's paused. That's still got to be resolved, or maybe unwind, or maybe roll forward. Rejoining the World Health Organization, the Paris Climate Act, those are not easy things to just bail out and just re-engage. And then we still have North Korea hanging out there. So we have a lot. But I would say, from a technology perspective related to this discussion this morning, the three major items President Biden is inheriting, and as investors and technologists, we really need to pay a lot of attention to would be the three things. One, the process of reining in the internet superpower. So that obviously, I can't imagine that will stop. Number two, how does this trade tension is going to work out, especially for technology companies with China, right? We sell to them, they supply things to us, we supply things to them. So that's super critical. And then the last one is the issue of brain drain. So for H-1B visa for workers and F-1 visa for students, this have basically paused for our country for quite some time. Now we'll have to know exactly what that's heading to. And then the hot topic, which is the Silicon Valley exodus, is something that is not just a California problem, right? This is a global problem. If the next Silicon Valley is not going to continue to be here locally in the San Francisco geography. So these three things I think has to be on top of this agenda. Yeah.
So Alfred, let's drill into the internet superpower. When you talk about superpower, we are, just to set the stage and make sure we're all on the same page, right? We are the Apple, Google, Facebook, Amazon of the world. And I think the 2.5 weeks ago with the Capitol attack was a demonstration of their power. Apple took out the Parlay app from the iOS app store, and immediately Google took the app out from the Android app store. But I think it was really Amazon to really nail the coffin for the whole service is out of Amazon Web Services. That's the part that you realize, wow, who's the boss here, right?
You're totally right. If it turned out, the world found out, everybody will have thought if the app get removed on the handset, is done, right? Obviously, then we have alternative handsets, and there's still other ways on the internet that you can actually get access to these type of social platform. But when the actual code of the application itself, which is actually running in this case on the cloud, is on Amazon, when they pull the plug, you really are done. So it really shows you who's the boss here, right? So I don't have the Q4 stat yet, but I'm going to put some statistics on the table and you'll see. So for Q3, right? So ending in September of 2020, the worldwide cloud market grew about 33%, right? So in a pandemic year, it went the other way, right? 33% year to year to $36.5 billion. So this is even more astonishing. So Amazon, AWS, had 32% of the market. They gained market share in the quarter, right? And they generate more revenue than the next three players combined. So which are, there's nothing to sneeze at. One, Microsoft Azure, which had 19% market share, right? Remember, they have all of the Outlook and Exchange data. Most people's email still on the Exchange server. Google, GCP, has 7%. And this one will surprise you. And Alibaba Cloud actually has 6% market share. So Amazon is not just bigger. They're almost like it. They're the biggest. They own a third of the market, right?
Right.
So if they want to pull the plug on any application, boy, how many applications or actually code, server code or infrastructure code from Silicon Valley company they don't run on Amazon? Very few. So they're the most powerful. So now, the other thing I think we should really think about is also about information and information rights and freedom of speech. So look at what had happened to the Capitol attack, and obviously alleged President Trump, who's being impeached, was involved in the thing. So for the longest time for President Trump, platforms like Twitter and Facebook were basically his megaphone of delivering his message. So he was able to outrun anybody because he was tweeting almost on a daily basis. But when Jack Dorsey shut him down, and Mark Zuckerberg shut him down on Facebook, it's not like it hurt him. He was like dead in the water. It stopped him. So now the question comes down to is, so who's in charge then? Is our information flow and the freedom of information should be controlled by Jack and by Zuck? Or it really should be controlled by our government? So those are all things that I think is crucial, and it has huge impact to the rest of the things that we build around these type of technology, on the front end or even on the back end.
Yeah, so I think it will create some really interesting opportunities, particularly with around privacy. And then, who knows, right? There have been conversation about breaking up these big platforms. And I think worldwide, regardless it's US or China, I think governments is really paying a lot of attention to, because if you look at Facebook, their monthly active users is bigger, like 6 or 7 times the US population.
Yeah, well, there's no doubt they're the most dominant social platform that people stand on to communicate. So let's change subject for a second. So Edith, obviously China is a very critical one, right? So we kind of are in limbo in terms of what is going to happen next in terms of trade and what position do we take. And there's so much interdependency between the two countries on technology. I mean, like literally almost all, really this is from the bottoms up, from the chipset, all the web to the handset, now into software and then the platforms. And we have platforms that we don't share, and we also have code that we actually share.
Right.
So you're the China expert here, right? So maybe tell us a little bit about what's your view, what's the research will show you, what likely will happen between the US and China in technology.
Yeah, so I have a really good conversation with Emily Chang on Bloomberg last week on this topic on Inauguration Day. I think, for sure the Biden administration would create a reset the China-US relations. And one thing for sure that I don't think that he would tweet about foreign policy on a regular basis. It's interesting to look at like his choice, Kathleen Tai, which is the new U.S. Trade representative, And then also our new Secretary of State, Blinken. Both of them have extensive experience dealing with China. And I think definitely they will go after China, particularly after the IP issues. But more importantly, go back to, as an investor, right? What should we pay attention to is twofold. One is from a go-to-market. I think, we constantly see all these news about Huawei and TikTok last year. I don't think that's going to stop. So foreign companies or Chinese companies to come to the US, they will continue to have a hard time. The other way around is not so much, and is not being reported on media that much, which is a lot of American companies, especially financial institutes. We're talking about the PayPal, Goldman Sachs, BlackRock, Citibank. All of them actually are now operating quite fully in China, either through getting new licenses or through acquisition in 2020, and that all happened in 2020. So I think in terms of operation, there's a lot of US financial institutions now there. But the second area we should pay attention to as investor is exit and IPO. So early this month, the Treasury Department and the New York Stock Exchange flip-flopping on a daily basis. Should we actually continue to list the 3 big telco of China? And that sent a really bad signal to the Chinese company. And at the end of the day, I think as American investor, we want a piece of the Chinese technology, like the BAT, right? And by the way, the BAT is no longer Baidu, Alibaba, Tencent. It's ByteDance, Alibaba, Tencent. And ByteDance is going public in the Hong Kong Stock Exchange, not the US, in March. So I think that we should pay attention to that, and just be aware that they don't really have to come to the US, and Shanghai and Hong Kong certainly are other choices.
Yeah, I completely agree, and it's actually something really we should be keeping an eye on and worry about, because at the end of the day, as investors, we are looking ultimately to be able to reap the benefits of the financial success of these companies through an exit. So if you look at what had happened in 2020, it's actually very interesting. The top 10 companies in the world raised about 13.6 billion. 6 of those 10 companies were based in China. So if this policy continues, all of the new IPOs will now be moving basically mostly back to Hong Kong, like ByteDance in this case, right? Shanghai or Shenzhen. Now, all of us were all watching and obviously keeping an eye on what happened to Ant Financial. Obviously, that IPO eventually got pulled, but it was not going to be listed on the big board here in the US. It was planned to be listed actually in Hong Kong. And that will be, for the first time, such a resoundingly large cap company. Actually, was supposed to be the largest IPO ever, bigger than Aramco, that US investor will be shunted, and we won't be able to invest into the deal at all, right? That's hugely disappointing, right? I mean, like, that we don't have access into, we lost access into some incredible deal. So the China thing really needs to be fixed. Well, let's switch topic a little bit, right? I'm actually more worried about another issue, which is this whole brain drain and also the exodus, right? So let's focus on what's actually is happening, right? So we do have one issue on the table from, like, I think people are mixing all of these immigration issues and the exodus issue all into one. But let's talk about a few things. So why are people leaving Silicon Valley? Well, there are a few reasons. Number one, we have a lot of exits happening, a lot of liquidity events, whether it's IPO, SPAC deals, some M&A, but we have seen unprecedented amount of deals being pinned up that ultimately will be exiting into 2021. So for people like me, and I have to admit, I think about this too, right? I've been in this around this four wall since March, right? I'm one of those people that rarely actually ever leave the house. And I think about if this room happened to be not here in the middle of California, in Silicon Valley, and actually it's in Nevada or it's in Texas or it's in Florida, then I say 13.3% capital gain tax. So obviously, this is on a lot of people's mind. A lot of people left. They would say, well, if I'm going to be trapped in a room, I'd rather trap in a room that can save 13.3%. But that has huge long-term revenue impact to the state, right? Can hurt the state in what it can do in the future. So that's a big one, right? Number two, some companies. So this might not have been fully understood, but we do have actually have a bill in California. By the end of 2021, companies that have 6 board members or more, that California company, required to have 3 female board members. It's a wonderful thing to do. But however, a lot of companies just looking at themselves and say, well, I'm just not going to make it by the end of 2021. So they pick up the bag and they left too, right? Some of them already have female board members, but they won't be able to get to, that level of, like 3 people. So a combination of these things, some of them could be serendipity, is causing this exodus, right? And then we also have to look at what happened to immigration, right? 57% of Silicon Valley's tech workers are immigrants. So if there is no H-1B visa for them to come, right? Companies like Tesla, Sun, Google, right? BEA, where I came from, myself, which I was on an H-1B visa, I would have been here talking to you guys today and sitting here in Silicon Valley. That would have been shut down. So that's a huge impact thing, right? So we have been so reliant on bringing smart people and integrating them into the Silicon Valley. It's been culturally what we do. Well, and equally important, by the way, something like 80% of our PhD students in engineering and computer science are on F1 visa. They're foreign students. So if we ever stop giving out the F1 visa, when we were in a brink of not only not letting the F1 students that were granted the visas to come back, President Trump was very close in chasing all the ones that were here that couldn't go to class and chasing them out. So if we have lost all of that, you can see the impact of those PhD students would not be able to stay here. They would not be able to finish their PhD and gone on to form resounding commercial companies that we have such relying on in the Valley to do breakthrough stuff. So that innovation chain would have stopped. So we have many things, all over the place are coming and hitting Silicon Valley at the very, very same time, right? So I would say we as investors really have to keep an eye on things like that, and I think from an investing perspective, so there are good news and bad news, right? So we're all now trapped inside, all working on Zoom. I actually think this has been extremely efficient, right? As a firm, we were able to see over 500 companies since March. That's just, if we had to do it physically, face-to-face, there would have been no way we could have pulled that off, right? So for a new firm like us to get it off the ground, having able to meet as many entrepreneurs as possible, especially when no one were investing back in March, April, and May, gave us a huge advantage. But I'm going to quote one of my best of friends and my mentor, Bill Janeway, about one thing that has made investing very difficult, which is, Bill has said to me, this is really a classic quote, if you cannot smell the sweat of your founders, right, how do you invest in them? So, I know we have made a couple of exceptions. We have socially distanced and we're able to look one of the founders we're about to pull the trigger and put money in and look them in the eye from a distance. Obviously, there's no way outside in a park we could smell them. But still, every aspect of working from home is great, but there's still that element of trust that require human interaction is still going to be crucial. So these nuances we still have to work out as investors. How do we make that super, super efficient, right? And speed is going to be super crucial in investing, especially going into 21, because it's going to be so competitive. The prices are rising, right? Especially we have big amount of late stage and exit deals happening. So to basically retrain our brain how to work with people, help them get company off the ground, build relationships, and then do due diligence, right? All on online is going to be something that we'll have to learn how to do.
Yeah, I love your smell the sweat. That's a very literal. I definitely have not smelled any sweat for a long time. So with that said, I guess we talk about some of the major world event, how it impact us, how we think about it, and how do we switch to more specific in terms of technology trend and
sure.
I love playing games and just to sort of and by the way, obviously we raise capital, we focus on early to A, particular all things enterprise and data infrastructure. So our opinion is definitely biased towards enterprise. But I'm going to like rapid fire, just going to say the trend, and then why don't both of us, they're going to be bullish or bearish, and then we're going to go into maybe a couple of these topics and drill down a little bit more. All right, so let's start with data infrastructure. Okay, 2 thumbs up. All right, education. Okay, healthcare. All right, it can't be all the same. E-commerce. Fintech. So I'm thumbs up too. Okay, we have different opinion. Entertainment. Gaming. All right, VR, AR. Okay, not so much. Open source, open core. And then crypto and blockchain. Yeah. And then last but not least, how about EV? Okay. All right. It's interesting. We're definitely a different viewpoint on certain particular on consumer, or maybe I'm just too positive about everything. So Alfred, why don't we actually drill down into a couple of these topics that I think probably the hardest sometimes for people to grab sort of their head around. And let's start with data infrastructure. I think a lot of people talk about it, and Snowflake, oh my God, like the valuation is insane with their IPO. What do you think about it? What exactly are there any opportunities still there for early stage investor?
Actually, I think we are witnessing one of the most profound innovation in technology, revolutionary technology right in front of us. So if you look back where the world is at and where it came from, so by and large, through the last 60 years plus, our computing was originally started as batch-based, right? Sequentially batch processed transactions on a mainframe, which is physically constrained to the location that you're in. That's where we started. So for the past 25 years or so, since the mid-90s, we were able to free ourselves from that computing model for enterprise computing into a highly distributed, right, and network-based computing model. So that was very exciting, but we stuck there. So I'm sure some of you have heard, like Larry Ellison would get onto an interview and say, okay, Jeff Bezos, you're great. Okay, you have AWS, but so what? All your mission critical applications still running on Oracle. By the way, he's not wrong. It's true. We're still running on stuff that was written in Oracle, written by BA, that were acquired by Oracle. In all of these ERP applications still running on Oracle's database. So by and large, structured relational data is still where the dominance action is for mission critical computing. But I think this is about to change. So what is happening is in parallel, which historically is after the fact analysis was done in data warehouses and eventually mutated in real time, large big data sets, right, in big data databases. So they went from Hadoop into Spark into those technology, and then people were able to now do real-time analysis and summarize the data very quickly. On top of it, now we can apply machine learning algorithm to learn from that, and then continue to do compound learning to ultimately give us very good recommendation. But none of this stuff at this point in time are for mission critical purposes, certainly not for real time. But I think this is about to change. So I think for 2021 and onward, what we're about to witness is what I call predictive computing, which is what we have seen in the past in mission critical computing and what we have seen in the past on big data analysis are going to merge into one thing. What the effect will happen is the following chain effects. We have large data we can do rapid analysis on, that we can also apply machine learning to be able to learn and compoundly learn to make recommendation to the business itself. And in the future, not only will we be able to make recommendations, but we'll be narrowed down to make a decision. Once we have decisions, we'll be able to execute on the decision, which is a transaction. So that will forever change transaction processing. And once this get into critical mass, transaction processing by and large will be fully automated at that point. Few transactions will need human intervention. So you can only imagine what does that do to the world. In the world of healthcare, treating a patient will be a completely different exercise if we have extraordinary smart system that can analyze data of the world and on top of the vital signs of the patient, and then correctly applying, treatment to the patient itself and assisting the doctor to do the job. Similarly, we can eliminate collision in transportation because collision avoidance systems and autonomous car will be so much smarter and be able to work together. And you can apply that to banking and finance and e-commerce, just every aspect of the world. So I think we're about to embark on a really exciting era of a whole new generation of mission critical computing now. I will call it the third major revolutionary platform based on predictive computing. So it's a very, very exciting time, right? I am like really so pumped up because I came from the world from the past and invented a platform to do so for the past quarter century. This is going to last us for a much longer time. It's great stuff.
Yeah, that's great. By the way, thank you everyone for already firing off all these questions on all these topics we didn't say yay or nay. But we will go on probably for another 5 to 10 minutes or so. After we go in this stage and IPO, we'll definitely open up for Q&A, and then I will pick questions to answer a lot of your questions. Some really awesome question going on is putting me on my toe. I love the fact that, Alfred, that you mentioned about there's plenty of data, but being able to automate some of these tasks and make decisions with real-time data is definitely not there yet. So a lot of these mission critical tasks, data is only as good as whatever that we massage, but there's still a lot more things need to be built, a new generations of software that we're waiting for to invest, obviously. Okay, so let's switch topic really quick. I don't know if you saw last week, there was a big lawsuit and argument going on between Elasticsearch and Amazon. And we talked about Amazon earlier. By the way, now they're worth $1.5 trillion. It's crazy. And AWS, in terms of their revenue, been increasing. Now, don't quote me on it, but rising at least 30 to 40% of their total revenue. So how did this whole war of open source, open core come about? And then again, what do you think in terms of our investment opportunity or technology advancement are there we should pay attention to?
Well, I think there are two very critical things happening in the software development world through open source. Obviously, you look at what had happened through the past dozen or so years of this transition from a proprietary code base, like what I did at BEA, the Oracle, the SAP, and the Microsoft of the world, to now the world's primarily driven by innovation through open source library creation, right? So Spark, Kafka, Cassandra, Elastic, and just it's countless. And so Kubernetes, everything is really coming from the open source world. And you have basically a large group of developers really collaborating and creating new stuff. Now, I've always questioned this. I said, one of these days is going to come reckoning that when you have either these MIT or Apache 2.0 license that allow people to freely use, freely contribute, freely spin off and do things with, freely run them, license, right? And its impact to have over time for companies. So if you look at the formula of how people have been doing this, especially in the last 7 years or so of creating companies out of open sources, it's either freshly minted entrepreneurs, they're coming from university or they're from various companies, or actually it could be a project inside a large company like a LinkedIn or a Google. So they will invent stuff that they've decided those really should be put in the open source community to drive more creation. And eventually, some of those entrepreneurs will leave and found a commercial company around them, invested like us, immediately jumped to invest into those opportunities because they are groundbreaking infrastructure, deep tech stuff, right? Which is hard to come by. So we're very excited about that. However, we've forgotten the license is still free to use. So when time comes for deploying those technology, obviously the obvious choice again would be at least 32% of the chance will be on Amazon. So they go on to Amazon. So after a while, I think nobody really should be surprised that they'll look at, well, oh, Elastic is great. I'm just going to take it, including the name, and brand it under Amazon and offer it as a service to my customer. So the question comes down to is, well, what kind of impact does that have in revenue and profit to Elastic as a company then? So this is a very serious and profound issue. So if anybody's been following this whole chain of events with Elastic, they are contemplating either creating their own Elastic license. And from what I could read, it sounded exactly like the license I had at VEA, right, which is the complete proprietary license. So I said, wow, this thing is going to go completely back to the future, right? Or that's also a kind of halfway in between compromise license called SSPL. So we don't have to go into detail of that. But it's almost imminently a change is going to be happening. But this is something that every, enterprise software company which is doing open source is something we really have to think about. The model that we used to rely on, which is creating this open source code, start a company, we control and offer the runtime to our customers, and then create some proprietary code on top and some servicing on top, will be sufficient to continue to have control over that code. And I think Amazon is showing people that's not the case, right? So you are vulnerable in terms of protecting your intellectual property. So I think that's whole one end of the issue. And that's the other end of the issue, right? So you look at large banks, large telcos, large transportation company, healthcare, everyone's now have such reliance on open source code. The mentality is, if I'm going to start a new project, like a new application to automate my business, the first things those developers in my IT organizations do is go on to GitHub. GitHub has over 50 million developers contributing on a daily basis.
Wow.
50 million, right? So these developers from IT goes onto GitHub and it's like a buffet. Ooh, let's just go pick a bunch of stuff that I like. And that's become the basis of the new application. That's all fine and dandy until you deploy. And what happened? Well, by the way, so obviously they didn't develop those code. They may not know how to fix those code. They may end up to be inheriting those codes. Bank has a requirement they have to keep the code around for a long time. Let's say you have a cyber attack. Who do you call to fix it, right?
Yeah.
So these are things where maturation has to happen, that open source must now mature to a point where it has to be as supportable as they were when we had proprietary code. I have customers to talk to, from telcos and from a very large stock exchange in Japan. They would call me, 2 years after I sold the company. So Alfred, I wish you were still around. It was so easy. All I have to do when I call you, wake you up in the middle of the night, you jump, you stop development, you fix stuff for us. Even if it's not your code, you fix it. I said, well, the world changed. It doesn't work that way anymore. But to mature, which I'm now, obviously there is no other way around open source. This is the way of innovation. The question is between the licensing and also supportability and keeping them up and running for mission critical reasons. We really now systems to put in place to do all that. This creates huge opportunity for investors because that means everything is running again. So I'm actually really excited about opportunity to kind of put in place to mature open source, put tools in place for DevOps, right? And for all aspects of stuff. So we don't even know when we tripped licensing problem at this point. We don't have tools to do that. So there's so many things need to be invented.
Yeah, absolutely. And especially, recently, you particularly had that conversation with George Lee from Goldman Sachs. He has 10,000 developer.
He had 10,000 new developers they have hired just to work on new products.
and so fascinating to learn the fact that even Goldman Sachs uses a lot of these open source
Absolutely, everybody does.
Libraries and have to think about things that from compliance to security to, as you said, if there's something gone wrong, or let's say new fixes that happen on GitHub, should I roll it out or not? But I think the IT department for a lot of the enterprise also realized they need open source developers because the iteration of the development is so much faster than trying to hire another 10,000 developers, to build in-house, right? So we have 5 more minutes before we open up for Q&A, and we have tons of questions already, but I want to sort of jump to quickly on sort of the different stage of investing and what we as investors should pay attention to and think about. So Alfred, is crazy. There's so many IPO that happened last year. And what do you think about growth stage SPAC? What do you think about this whole environment and what we should think about as an investor?
Well, I think that's actually what's happening in the world. Is actually really, really good. I will say it feels like it's 1999, right? It's almost like Prince's song. And that was really, really good time. And I think the good time actually have come back in full circle. IPO is the ultimate form of liquidity because it allowed the company to basically have a way to fundraise to a much larger population forever, right? Once you get on that platform, you can offer secondary offerings, you can do, all kinds of other financial, means to be able to raise money in a public fashion. And you are fully exposed, right? And you have to be fully compliant to be able to do that. So that's marvelous to have the level of velocity of the number of IPOs that we're seeing in the marketplace. That's outstanding. I think that part is extremely good. And obviously for the companies now, not just those companies that actually can cross the hurdle in terms of earnings stability and revenue stability and be able to pass all the really complex compliance requirement can go public. We are now also have specs, right? So those specs have become shell vehicle for companies that, that have huge opportunity, but not yet be able to easily, cross the barrier to either do a direct deals or through a traditional investment bank backed IPOs. But those investment basically was not available to any public investor in the past. Now they become public investable. Obviously, there are pros and cons of that. We can talk about that some more, of SPAC type of deal, what we have to be careful about. But nevertheless, IPO is a crucial thing to make the system work. Obviously, what this has transpired is it makes late stage deals that for a company growing really fast, almost a no-brainer to be able to raise money. But it directly translates into early stage deal being extremely excited because you need those to create the next Snowflake, right? If you have no formation of the next Snowflake, you're not going to have that a decade from now for it to exit. So this market obviously is super exciting. Now, before we get into talking about some of the whole chain of things, actually, I'm going to turn it over back to you because you were at 500, you did Mobile Collective, you get 2 unicorns under your belt, 10% of all of 500's unicorns. So tell us about how you feel about, early stage investing. And we've been seeing 500 plus companies, and obviously it's going extremely well. But how's it different from the past? Tell us more about early stage deals.
So, and by the way, our audience, Fred, Shandis, also have a similar question, sort of, how do we deal with remote deal making, and how do we streamline due diligence process? And it's going to relate it to early stage. So first and foremost, I came from 500, which is one of the most active early stage incubator and fund in the world. And I have to say, all of us sort of just didn't know what to do with ourselves since March because everybody's stuck at home. So one of my predictions for this year, I think incubator will be, unfortunately, less and less relevant, not because the intention is not good, but the key thing about incubator is the camaraderie, be able to see each other as a group, to really bond. And now to do it virtually is just not the same. I think as early stage investor, and I'm sure that most of our audience are investors, and I think all of us better get used to doing deals remotely. It's been tough. Like we've done quite a few deals in 2020, and we have to do all the due diligence, customer references, the former team references, all through Zoom. And some of them actually don't want to get on Zoom. The customers, particularly from the bank, they just wanted to have a regular analog phone call. So there's a lot of the nuances, can't smell any sweat for sure, and still be able to sort of get the hang of, we need to sort of train ourselves to ask much better questions, to like CIA pretty much. But one thing that all of us need to be aware of is a few things. One is, particular for us as enterprise focused and developers tool focused investor, our founders are actually very comfortable with this way of communication. They don't have a problem with it. If they can just hi and just leave me be and co, right? One of our founder, Moon, who's still a stealth startup, he's working on sort of like be able to SaaS all open source library. He has no problem to hire himself for the rest of his life. So in that sense, us as early stage investor, we need to be very clear about our value as. We talked about that before, like last year, at least 12 to 13 billion been deployed in early stage, C stage. It's competitive. So that's why like we, on purpose for us, we're doing more and more of these sort of conversation, because money is money. It doesn't really matter as much. It's really about what kind of value add we as investor can provide to founder. And that's what they actually care about like the most, particularly for early stage.
Yeah, Edith, is so true. So I'm going to quote Janeway again one more time. Very early in, actually, I remember in 1994 when I met him for the first time at the Los Gatos Inn, and we spent hours. He was so excited about the thesis that BA had, which is to go kill the mainframe, and so intrigued. But one thing he left me was, he said, Alfred, you gotta understand, at the end of the day, the most important thing is to figure out the business model that it must generate cash. Cash flow positiveness is equal to shareholder happiness. So I think when the world is so excited and there's so much capital flowing around from late stage to early stage, we really have to stay true to the guide our founders to always make them understand we're here to make a very profitable business, especially for us, which is in doing a lot of the deals in enterprise infrastructure, right? The reason why we're excited about these deals, not only because they have profound impact to the rest of the stacks above us, but very, very importantly, right? These are businesses that can get to 90+% gross margin. And if you're very good, you can get to 40+% operating margin business, right? And generating a huge amount of cash. Ultimately, there's nothing can compare to businesses that are successful that are throwing off that kind of cash on the balance sheet. And it will let us be very sustainable over time, right? So, but technology, it's a strange field where at times we can almost ignore that. And we've seen that for a big part in 2011, 2012, 2013 onward, and how business got into so much trouble when we first hit the crisis, right? So it's very important to remind us of all of that. So I think it's an exciting time. Look at 2020, there were over 120 VC-backed IPOs raised in the combination of close to $260 billion, right? So, I'm sorry, with $260 billion worth of valuations generated. So it's a crazily exciting time. I mentioned earlier about, obviously exit for an IPO when you can cross that hurdle is terrific, right? That really is the ultimate dream of everybody, because I also think it's the pride of the company and the people that are involved with it to show the world how great they really are, because then everything at that point in time is on the table. And you now have to make not just the quarter, the year, but now you have to make prediction of what it's going to be like in your business performance of 3 years out. So really you grow up to be an adult when you take the company public. So I think this vibrant IPO market is exactly what tech needed and what the world needed. And this will continue to provide capital and also benefit for all the people that participate. SPAC's slightly different, right? SPAC's obviously it's a great tool, but first it has a limited time slot, right? It's time frame. So SPACs generally are created for either 12 to 24 months kind of range. And then they go find companies to then acquire and in fact, taking them public in this case. So I have fear where great companies are hard to find, right? Great companies to be able to take public and they don't run afoul is even harder to find. You really have to make the 4 to 6 quarters smoothly and be able to make the quarter and guide up along the way. That's not an easy thing to do. I've done it for a long time. This is a tough task. So, and this really is not for the faint-hearted. So it really needs business to be strong enough to be able to do those kind of things. I'm also fearful when that 12 to 24 months, when time's running out, people is going to get silly and they're going to do ill-equipped company and put them into the SPAC itself. So as investors, I cannot, every one of my friends, and now all of you that's on this call are my friends, got to be very careful. You have to really look at the underlying company, and read all of the filings very, very carefully to understand exactly what the potentials are. And the most important thing is, can they sustain at least through that grace period and be able to continue to execute? So something for us to really, really think about, right? And that obviously will have impact to the early stage also. We know that all technological innovations will require somewhat of a capital bubble. We obviously have one now because we need room to be able to make a ton of mistakes to get the great company out on top. So anything that can hurt it, right, will not help the cause to continue to innovate like the rate that we have been. I think the pandemic have shown the world how critical technology is. I think I talk about a lot with a lot of folks that said, Just look at what happened in the last dozen years since the 2008 financial crisis. What have we invented? The cloud, software as a service, the touch phone, the whole app economy, the gig economy, and social network. These things have went from, maybe crazy technology to they become the most essential thing that we needed, when we got shelter into our house. So this is not technology is going to be critical for us to survive as mankind. So we want to do everything that we can to protect it and to continue to let the innovations to continue to innovate like the rate that we are.
Okay, so we only have a few more minutes left, and I want to answer some of the questions that we have from our audience. And let's actually start with Bill Janeway. So thank you, Bill, for joining us today. And Bill asking a really interesting question for Alfred. You mentioned earlier transaction could be fully automated. So let's say, what if it happened to healthcare? Then who is liable when something go wrong? Who must get insurance?
Yeah, well, now obviously I'm a technologist, so I will always especially telling Bill, say, Bill, don't worry, okay, all details will be worked out. I think I must have said that over 1 million times to Bill in the last 25 years that I know him, and they worked out okay. Okay, so now, but it's kind of what I would imagine the ultimate case would be. So again, this is the ultimate case. So you look at what had happened to like COVID, right? So because I'm on UC Davis's board, so I really have some close encounters to understand exactly the impact of COVID in a hospital. Obviously, in all the experience that we have done, it's pretty heart-wrenching stuff. But it's not very scientific the way that we treat our patients, right? Because internal medicine is not it's not totally a scientific thing. So we have great doctors, they have a lot of experiences based on the vital signs of the patient, right? They treat them with what was recommended set of drugs, right? So we have now really a pretty large set of different drugs that we could use to try to cure a patient that have contracted COVID. But it really shouldn't be the case. So you imagine what we really should be looking at is a broad set of data of all the people that have COVID in the world, be able to dig very deeply into understanding exactly what underlying conditions do they have, right? And how did they actually contract the virus, right? What were the incubation period like? What were the symptoms, right? And what remedies have actually worked for them? We got to continuously in real time use those sample, then to look at the current vital signs of the patient and properly provide the right amount of the variety of different drugs for them to have the best chance of getting them cured. So it's a very complicated IT problem, right? So we first need to get access to not just we now also have a lot of privacy concern. Healthcare has privacy concern in the first place. So now we're going to need new technology. We just recently funded the company to do this exact thing, which to be able to analyze data that we're not supposed to see. So they have to be in a encrypted enclave, right? But yet we can extract the essence. Not only we can extract the essence, but we got to be able to now report it and summarize it and eventually derive a decision and say, this patient really needed an extra drip of remdesivir. So by the way, the doctor's still on the hook. The doctor is still looking at the patient, except it's not based on such a small set of data and just the current vital signs of the patient, but it's based on the broadest possible set of data that we can possibly get in the world to drive that decisions. Wouldn't that be so much smarter and so much better if we have the ability to do so? So big data analysis, ultimately deriving a decisions and acting on it through a transaction is going to be so pinnacle to save lives, right? So I think the doctor is still on the hook in this case because doctors still have to supervise to make sure the system is not doing something foul, right? Until we trust it so much and the learning has become so, complicated and so successful and so compound, then we may not, we can actually have much more of an arm's length, kind of view to it. But in the meantime, the doctor's still on the hook to do it. But we're just providing all the tools for the doctor to do such a better job. So I think I much rather have that personally. If I ever get COVID, God forbid, right, and having the world's data to be analyzing, helping me, what's best for me, than the doctor at that moment looking at the chart and looking at some, a little screen and say, oh yeah, try this. I've always, wanted to have a much more automated way of treating patients. I think that this is coming.
Yeah, Daniel, I asked a very interesting question, sort of also related to this, to sort of the data infrastructure side of the topic. So in the next 5 years, it seems like we focus on mostly unstructured data. So image, video, documents. And in the last 20 years, it's mostly more structured data. You're talking about, all the data warehousing, transaction data and frame, and more text space. And so with now more AI and ML bringing in for unstructured data, what's your comment like related to that for the next 5 years, and how's that? What's your prediction?
That's a superb question. So actually, the answer is simpler than you would think. So historically, what had happened is we have a garbage in, garbage out process. So when a developer creates an application, the first thing they do is they set up basically the data structure, right? So what attributes do they have, right? And then what do you expect it will collect structurally, right? Based on very confined set of different type of, either their numbers or their name or whatever, right? So that has always been the case. So, but then all the analysis you can do can only be based on that. You are fixed. They are structured, right? The good news is because they're structured, they are defined. It's easy to do a search and easy to do, to run queries on. Now, the big data is different. The big data is based on more of actually what is happening, right? So you have a very big view of unstructured things that's going on to give you insight into what actually is happening versus what the developer was thinking at the time they built the application. Ultimately, we need both. But what I think is going to happen is the following, is we will start blending the structured data into the big database. So either in the whole form, accessing relational database that commoditize and just get, blended into the larger data set that we're going to be poking at and learning from and making decisions out of, or cross-checking over the structured data, or ultimately they will become fields and selection that we actually will be collecting, and then we'll be going back to select on of structured stuff in an unstructured database. So it gives us a great opportunity to really rethink what is the future of the proper big data database will actually look like, which is not invented yet. And many people are talking about inventing a new one. I'm super excited about that because the dominant unstructured database that we have now is already very old. It's a decade old. Yeah.
Yeah, thank you for everyone. That we have so many questions. I try to pick a certain question that address at least one of your questions. A look at this question, which I think is very interesting. Like, what do you think about fintech, particularly on the consumer app, so that evolve on top of infrastructure that make some of these fintech company, right? So there's no longer fintech company. They could be lifestyle, could be consumer, but they're all fintech across all vertical. What do you think about this phenomenon?
Well, I am going to be a little selfish and self-serving in answering this question a little bit. Well, there is, by the way, even I'd say that about fintech, there's one segment of fintech I'm particularly excited about. And I think there are some effort is going on to solve this problem now. And that is the ultimate mutation of the primary user of banking API for commercial banking and retail banking first, right? From consumer, which is you walking into the bank, and then you will be using their application through their application to do those kind of banking services, to now the primary user of those banking services will be developers. And they will be embedding these kind of banking services into the applications, right? We talked about embedding collaboration, like a Zoom or a Slack or a whiteboarding technology or note-taking technology directly into every possible application. That's almost as a given. It's a fait accompli that in 10 years from now, every app will have these features in there. But I think having the ability to do KYC so that we can actually open a bank account, do ACH so we can actually do transfers and stuff, it's going to be almost a necessity anytime that anyone building a user-facing application. So the only way we can do that, and actually it's interesting why it's self-serving is because that stack looks like middleware and a set of APIs, right? But I think the thing that I will argue is we probably don't need to, for every single one of these instances, to get a banking license and then open up a new bank. We may be able to recycle the banks that we have now and partner with them so the ultimate deposits still go back to the bank with a bank license and they worry about the compliance at the end of the day. While at the front, this is where the adoption is going to come from. The new deposit will be all coming from code developed by developers embedded in the application. And that, I think, will only be the logical thing. There are a few attempts in the marketplace. Not all of them are super successful. We've seen a new generation of them being created in the marketplace. I'm very bullish about this approach of banking.
Yeah. I'm going to take one more question from the answer one more question from the audience, and unfortunately, I'm known to be always end on time, start on time. So and we will definitely follow up with a lot of more audience questions. Apologize for not able to address all of them. This one is from ASUS. It's a great one. When is the right time for a company to go IPO? There's always room to grow, and is it better to bring in another investors to grow more? For now, we start to see like Series G and F, or like, how do you think about it, Alfred? Particular when you took PEA IPO, what was some of the thought process, or rather raise another bigger round?
Well, I think that is actually mostly dependent on the type of investors available in the marketplace. When BE went public, the whole hedge fund community and the way that the whole business was laid out was vastly different. So we have a lot of hedge funds that were a lot smaller than the hedge fund that we have today. So the small hedge fund really have the ability to write a much smaller ticket, still get in the stock, and still put an analyst on it and follow the stock itself. So by the way, that rhythm is an extremely critical one. So having a company to go public and nobody follow you, basically your chances of, continue to be able to have a share price increase is going to be very low, right? So you want people to be following you. You wanted basically that message to get out to help the company to build a brand and to be able to do more business. So now I think we're right in the stage where there were very few IPOs for almost 20 years. And all of a sudden, this floodgate is open. We're now having a huge amount of IPOs opportunity happening again. So this is going to be kind of odd time where the hurdle is going to need to be super high, just because we have so many pin-up demands of great companies that have such monstrous sized revenue in the hundreds of millions of dollars in revenue, stable revenue, to billions of dollars of revenue. They're going out. They were supposed to be a public company a long time ago. It's just the market wasn't there. But now they're finally available and people are super excited about it, right? Remember, you need the public investors to be super excited about opportunities, to all oversubscribe to the stock to make this process work. So that's extremely important. So I think my only recommendation, my advice to people would be, it's a one-way ticket. Once you go public, now you're on the clock to make the quarter, to make the year, and make your 3 years plan, right? Anytime you don't do it, you're resetting your plan, is a really painful process, right? And it's not for the faint-hearted. And the maturation of the company, not just the CEO and the executive team, has to be ready to go do that. And I think that there are many, many, many people that can help you to look and examine the readiness of this process. But it's a one-way ticket. You have to think of it this way. This is not like, oh, I did poorly in my D round, so maybe I'll just make up with the E round. That's it. Once you go public, you become a public company. So that's something really to be cognizant of.
Yeah. Okay. So we have 1 minute left. And Alfred, any final thoughts? If there's only one thing you want our audience to walk away with, like one big idea, what would that be?
Well, so first of all, I'm so flattered that we have such an incredible turnout that I didn't even think, for such a casual talk. Well, for this massive turnout, I'm very flattered. Thank you, all of you, for coming and to listen to us. And we have talked about so many things on this call, and I feel so bad that we couldn't answer even a handful of the questions that we have. So many questions left on the table. We'll find a way to contact you and actually have a chance to answer all the questions you have. But I have to be honest, I'm a technologist at heart. Few times in my life I've seen really opportunity of a lifetime. So this shift to, this predictive computing field is so profound, right? And it's so rarely people are genuinely ready and the world's ready to move our data processing methodology, into this extent. And this has to move to this new model because it's necessities, right? So, and that's so exciting. We really haven't changed anything, even in the current model, for 25 plus years. All the innovations are by and large piled on based on the distributed, network-based computing that we have. We now have network, on a cell phone, it's gonna be 50 gigabytes per second. We need to have a new generation of technology to do remarkable things through the applications itself. That I think is going to be huge. too bad we only have an hour. This topic really required at least an hour just to go deeply into what, all the different things architecturally that we need, that we have drafted. But I will assure the audience that in due course, we will share that with everyone, and we also will share with you the type of companies we have invested to build this whole thing out. It's not going to be one company, it's going to be the whole industry. Yeah. Thank you very much. Yeah.